Welcome back. In this chapter, we're stepping beyond the charts and the price patterns into the real story of the markets. This is where fundamental analysis comes into play. Think of it this way: while technical analysis shows you the dance of prices, fundamentals explain why the music is playing in the first place. They help you uncover the deeper forces that move the markets, and they equip you to judge whether an asset is truly undervalued, overvalued, or right where it should be. In other words, fundamental analysis is your compass for making trades grounded not in hunches, but in real data and reasoned insight. So, why should you care about fundamentals? Because they're your secret weapon. When you understand what drives companies, economies, and even entire industries, you're no longer just reacting to price swings, you're anticipating them. You're looking at what's happening in the world, connecting the dots between earnings reports, GDP numbers, inflation releases, or even geopolitical events, and you're building a picture of where value truly lies. That's what separates a guess from a strategy, and it's what gives you a long-term edge in the markets. At its core, fundamental analysis rests on a few solid pillars. First, financial statements. Companies live and breathe through their numbers. Income statements, balance sheets, and cash flow statements tell you whether a business is profitable, whether it's drowning in debt, or whether it's got room to grow. If you can learn to slice through these reports and really understand them, you'll be able to judge whether a stock is a solid opportunity or a ticking time bomb. Then there are economic indicators. This is your pulse check on the broader economy. GDP, unemployment, inflation, interest rates, they're like vital signs for an economy's health. If growth is strong and jobs are plentiful, markets tend to respond one way. If inflation is rising out of control or unemployment is surging, they respond another way. As a trader, knowing how to interpret these signals gives you context for every move you make, but fundamentals don't stop there. Global events are another massive factor. Geopolitics, trade agreements, wars, elections, central bank policies, all of these can shift markets in an instant. A trade war between two major economies, for example, might hit commodity markets, currencies, and stock indices all at once. Staying sharp to these changes lets you prepare rather than panic, and don't forget industry trends. It's not enough to know how one company is doing in isolation. You need to know the direction of the sector it belongs to. Is technology on the rise? Are oil companies under pressure? Are banks making a comeback? Understanding industry shifts helps you spot opportunities early and avoid sectors that are heading into storms. Now, having the pillars is one thing, but you'll also want some power tools to bring your fundamental analysis to life. Start with an economic calendar. This is your map of the events that move markets: earnings reports, central bank announcements, inflation numbers, GDP releases. Mark them down and know when they're coming, because those are the moments when markets often see the biggest jolts. Next, news feeds. Real-time information is gold in trading. Breaking news can flip markets upside down in seconds, and the sooner you know, the quicker you can respond. Pair that with research reports, which give you deep dives into industries and companies, often with insights from analysts who spend their entire careers studying a single market. Using these resources together turns raw data into practical trading knowledge. So, what's the big payoff of fundamental analysis? It's the long game. You're not just chasing price moves, you're rooting your strategy in the underlying reality of the market. It helps you avoid hype-driven traps, like chasing a stock just because it's buzzing online. Instead, you're looking at cold, hard facts. You're asking, does this asset have real value, or is it just smoke and mirrors? That's how you build strategies that stand the test of time. This chapter is your step-by-step guide to building that foundation. You'll learn how to break down financial reports, monitor economic signals, and weave all that information into a coherent approach to trading. By the end, markets will stop looking like random noise. Instead, you'll see them as stories about companies, countries, and industries, stories that you can trade on and profit from. And here's how we'll tackle it together. You'll be diving into Tip 21, which focuses on studying financial statements, really learning how to read the numbers behind a company's performance. Then tip 22, which is about monitoring economic indicators, those key signals like GDP and inflation that tell you what's happening in the economy at large. From there, tip 23 digs into earnings reports, which give you a quarterly snapshot of a company's health. Tip 24 will walk you through industry analysis, helping you understand the bigger trends shaping entire sectors. We'll also explore tip 25, which looks at global events and how politics, trade, or conflict can shift markets. Tip 26 brings us to interest rates. One of the most powerful forces out there, since central bank decisions affect currencies, bonds, stocks, pretty much everything. Then in tip 27, we'll cover company news, mergers, acquisitions, product launches, the things that can make or break a business overnight. Tip 28 introduces you to economic calendars as a practical tool for staying ahead of key events, while tip 29 focuses on analyst reports, which can give you valuable outside perspectives on where markets are heading. Finally, tip 30 is all about market sentiment, the mood of the crowd, and how collective psychology can push prices up or down regardless of the fundamentals. By the time you've absorbed this chapter, you'll have cracked open the world of fundamentals. You'll know how to size up companies through their financials, ride economic waves by following indicators, and weigh the impact of global events. You'll be tuned into earnings, industry shifts, interest rates, and sentiment, and you'll have the tools to put it all together. With economic calendars, news feeds, and analyst insights in your toolkit, you'll see beyond the noise and root your trades in facts, not just guesswork. And that's the real power of fundamental analysis. It gives you the confidence to trade smart, to skip the traps, and to build strategies that actually last, if you're hungry to dive even deeper. There are some fantastic resources I recommend. Benjamin Graham's classic, The Intelligent Investor, is the gold standard for value-driven trading. Usbach Damodaran's Investment Valuation is your go-to guide for mastering asset valuation. And if you want a solid grounding in fixed income, Frank Fabozzi's Bond Markets, Analysis, and Strategies is a must-read, so, take a deep breath. You've just stepped into the world where markets meet reality. And with fundamentals on your side, you're not just watching prices, you're understanding the stories behind them. That's how you unlock value, and that's how you trade with confidence. Stay focused, and let's now dive into tip 21, study financial statements.
Thank you for listening to the Ultimate Trading Podcast, the audio companion to the Ultimate Trading Guide for Novice Traders, brought to you by Bell's Forex Audio Works. I hope this chapter gave you valuable insights and the confidence to take your trading journey forward with purpose and discipline. Stay focused, keep learning, and remember, your trading success starts right here. If you enjoyed this episode, don't forget to like, subscribe, and turn on notifications. Your support helps us grow and bring you even more free trading education. And of course, share this podcast with anyone who's thinking about starting their trading journey. It might be the nudge they need to trade smarter. You can visit us anytime at bellsforex.com to access the full guide for free, or grab your copy on Amazon in Kindle or paperback. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!